I'm duty bound. You made 611%, nearly $5 billion in the second quarter. How did you do that? What was the compilation of that $4.7 billion? What was the boost in the numbers?
Well, good morning. Thank you for having me back. Well, we did it basically based on very hard work that took place for almost 4 years now. We've rebuilt the team from the ground up. We've cleaned up the portfolio in the tune of $20 billion. We've implemented a very precise and highly ambitious strategic asset allocation plan that took our cash down from roughly 42% down to 10% today. We made sure we had the best-in-class managers running our investments.
So, Meshal, let me follow up on that in terms of your current position as it's divided between equities and fixed income. What is the balance? Have you gone a little bit more defensive, maybe because of uncertainty in the U.S. or concerns about the coronavirus?
No, we started off with a very high cash cushion, again, 42% in late 2016. And we usually took that down to roughly 10% today. We still have a huge cushion by any institutional portfolio measure. On top of that, our asset allocation is optimized. We're very well diversified across asset classes, regions, countries, currencies as well.
Well, let's get a little bit more detail on that diversification. We have the prospect of a vaccine and a new Biden administration. Will you allocate more of that cash that you have on the sidelines to U.S. quoted markets or U.S. markets in general?
Well, it's the most unusual year, at least in my career. We're facing the world is facing a difficult situation here. It looks like we're finally seeing the light at the end of the tunnel. We're definitely highly committed to investing our portfolio. We're looking to increase infrastructure. Actually, the investment committee have just approved the new strategic asset allocation plan devised with the help of Mercer. It comes at the end of a 5 years allocation plan that was basically that will be officially and completed by the end of our fiscal year, our current fiscal year, March 31st, 2021. I mean, the new plan, the Mercer plan, which comes on the back of the Cambridge Associates plan, entails increasing infrastructure from 5% to 10%, as well as fine-tuning some of our other exposures throughout the portfolio, increasing private equity from 10% to 13%, lowering equities from 27% to 22% as well.
I mean, you point out that you're looking to increase your exposure to infrastructure. It is the name of the game as far as you're concerned. In terms of actual numbers, I mean, how much additional capital is that going to make use of? And then at the same time, like in terms of geographies, where is this infrastructure that you're looking to pick up?
Yeah, sure. We're mainly focused on developed markets, namely North America and Western Europe. That being said, we do invest in other markets as well. Doubling up our target allocation really entails us making sure that we really scour the universe of managers. The infrastructure as an asset class is not really as old as private equity or real estate, as you know. So therefore, making sure that we are with the best managers, the managers who have capacity, who can handle basically big tickets, is not an easy. It's not an easy task at all.
Okay, well, when you turn up, their lips will salivate. How much of your investment in infrastructure will be in green? It is the buzzword. It's Green Horizons Week. I've been talking about it to a whole host of people. How much of your allocation, Meshal, will go to green or to ESG projects in the evolution?
We're strong believers in ESG. We're working very closely with Wafra, Inc., which is an asset manager which we own completely, based out of New York. They're launching an ESG product, and we're working very closely with them to make sure that that product basically has a successful launch. We're highly committed. We're definitely heading in that direction.
Meshal, you, of course, work with an army of investment experts. So I want to get a bit of a sense from you as to where you see this coronavirus headed. I mean, are you anticipating a more severe second wave with lockdowns spreading around the world? Or would you say that the worst is over and that early 2021 into the latter part of the year, that everything's going to start improving a little bit?
Well, I'm an optimist by nature, I guess. We've seen so many crises basically come and go. The latest news is very positive. But again, being a pension fund, we're definitely always focused on the long term. We're talking about 15, 20, 30 years and even beyond. We don't necessarily look at stock charts. We look at balance sheets.
Look at balance sheets and the future. Meshal, we have a prospective president-elect, Mr. Biden, and a new administration with climate at the front of that agenda. How do you think the Biden administration is going to shift your perspective on investing for the next 4 years?
Well, I think our focus on infrastructure, basically doubling up infrastructure from 5% to 10%, comes at a very opportune time. Infrastructure, especially in the US, needs a lot of work, and I think there'll be lots of opportunities during the next few years.